Okay, so let's finish this one up now. The next thing we're going to do on 4:30, again, our cutoff date. We're making everything correct as of our cutoff date because this is the adjusting process. This is chapter 3. We only care about our cutoff date. Adjust prepaid advertising 2000 for April. So what we're going to do is we're going to take it out of prepaid and we're going to put it into advertising expense, because what happened, we must have paid for advertising before we used it. Now they're giving us the advertising. We're going to take it out of the asset, put it in the expense. As expenses always go up, so advertising and promotion, that's an expense, 2000. And then we're going to credit the asset. Assets have a debit balance. We want to make it go down, so we're going to do the opposite thing to it, which is a credit. So prepaid advertising is going to go down. So this is what we did in chapter 3. Now notice that I'm going to save and new that. The next thing they're going to tell us to do is to reverse it. Oh, I'm sorry. We're not going to reverse that one. That one we actually used, and it's not going to be reversed. So on 4:30, adjust prepaid insurance, 1,833. So same thing as of our cutoff date. When we pay for the insurance, we credit cash and we debit prepaid insurance because we haven't used the insurance yet. So you can't get in a car accident and then buy insurance. So now we have used it, so we're going to take it out of the asset and put it to the expense. So insurance expense. Expenses always go up. Expenses have a debit balance. We're going to make it go up with another debit, 1,833. And prepaid insurance is an asset. We're making the asset go down because that asset has now expired. And assets have a debit balance. How do we make them go down? We do the opposite thing to it, which is credit. Alright, so I'm going to save and next on that one. Okay, record depreciation expense. If you go back in your book and look at depreciation expense, you'll see that it's always the same. There's the rules for the adjusting process. There's always a balance sheet account. There's always an income statement account. Income statement accounts always go up, and the income statement account related to depreciation is called depreciation expense. Expenses have a debit balance. How do we make them go up? We do the same thing to it. So 3870. We're going to debit the depreciation expense and credit the balance sheet account, which is accumulated depreciation. Accumulated depreciation is a contra asset account. It's going to be related to the equipment account, and the equipment account is what we purchased it for. Accumulated depreciation represents the amount we depreciated it by. Therefore, the equipment minus the accumulated depreciation will then be the book value. Okay, save and next on that one. Okay, reclassify the deposit of 16,250 received from Buena Vista Water Sports to unearned revenue. So this is what I want to show you this real quick. If I go to reports, we go to company, and we go to let's take a look at the balance sheet. Well, let's take a look at it like a trial balance. Reports, accounting, trial balance, and we go to 010109 to 043009. We've got our trial balance here, and you'll notice in accounts receivable, what we have is we've got some debits in there. So let me some negative amounts in there. Let me show you that. If I go to customers and receivables, and we go to the detail as of 043009. So here's our receivables. Matches the same as the trial balance, as you can see, and you'll notice we have these negative amounts, which were payments in there. And basically, this works for QuickBooks, but it's not right to have negative amounts in there. These are deposits that really we owe back to the company. So from a practical standpoint, it's nice to have them in receivables. When we do our financial statement, we got to pull them out of the receivable and put them into what they really are, which is a liability for cash we've received when we haven't done our part, which is giving them the boat yet. So that's what this journal entry is as of 4:30. So this is that 16,000. looks like it's this one right here, this deposit. We're taking it out of the receivable and putting it into a liability. All right, let's do that. It's gonna be great. Let's see. So reclass 16 from Bueno Water Sports from a receivable to unearned revenue. All right. So we're gonna debit accounts receivable, making it go up because that was a negative amount that we need to take out of it. We have to put the name or it won't let us record it. So this is received from Buena Vista Water Sports. So Buena Vista, alright. Okay. Buena Vista, and we are going to credit unearned revenue. Alright, so we're going to hit next on that. And we're going to reverse that as a 5-1 because, again, we're only doing this to fix our books as of the end of the cutoff date so that our financial statements are correct. We don't have a liability in the receivables. But from a practical standpoint, it works this way. So we're going to say accrued or unearned revenue, decreasing it with a debit of the 16,250. We're just reversing the prior transaction. And accounts receivable, we're going to put it back in there from Buena Vista. There we go. Next. One more. The Bank of Florida statement as of 4/30 has an ending balance of $54,475. All checks cleared the bank except check number 1050 and 1053. All deposits cleared the bank except the $30,517. The bank statement shows interest income 35 and charges. Okay, so this is the bank reconciliation. Can't stress how important the bank reconciliation is. So let's do that. We go to banking. We go to reconcile. So remember, the bank is keeping track of our records as well. So the bank statement date is as of 4/30/09. This was the beginning balance on the bank statement before, and we are showing an ending balance of 54,475.02. They're telling us that there were service charges that the bank charged us. The bank statement shows service charges of 25. So we're going to include that because that's not in our books yet. They're in the bank's books, so we have to include them in our books, and we earn 35 of interest. It's not going to happen, but all right. So then we're going to go save and continue. Okay, so really in real life we would compare the bank statement to our what we have here and check them off one by one. Check them off the bank statement, check them off here. And in this case, what we are going to do, we could check this, hide all transactions after 4/30. There aren't any. Mark all of them. So that would mean that we saw all of them on the bank statement. And then we're going to unmark the outstanding checks and outstanding deposits. And at the end of the day, this should go to 0. Okay, so Bank of Florida 4/30, all checks cleared except 1050. So this check didn't clear. And 1053. So again, in real life, you'd have to check them all off, and these are the two that wouldn't be checked. Okay, all deposits cleared except for that 30,000. So we're not too worried about it because it's at the end of the cutoff date. So we're assuming that it did clear it on sometime in 5/1 or 5/2. Now I would totally double check that when we look at it. Okay, so the Bank of Florida. All right, I just realized that in the book, did not include two checks that need to be in there as outstanding. That's 1051 and 1052. So you'll see that those are the two you need to make right in order to tie out to our bank reconciliation here. So the book did not include those, and they should have. So make that adjustment. Let's see. That's the profit and loss. I don't know where the bank. I printed the bank rec out though, so when you print it out, that's what's going to make it 0, and you'll tie out to the bank rec. So I'm going to reconcile now. Okay, so they're only asking for the detail, so you're going to want to display the detail, or this. I'm sorry, they only asked for the summary, but anyways, I don't care, whichever one you want. But so you'll see what happens here. That the unchecked amounts are the outstanding checks. So this is the amount that cleared the bank. These are the uncleared balances, and this is our ending balances on our trial balance. So that's how we tie out the bank reconciliation. Okay, so then you're gonna basically want to save this as a PDF file, save as a PDF, and save it to the appropriate folder. I'm not gonna do that. You save it to the appropriate folder and then upload it to Moodle. Alright, so I'm not going to do the profit and loss. You know how to do that. The balance sheet, print the balance sheet. So you would go to reports for both of those. Okay, and the profit and loss, of course, is on the top of the company financial, and the balance sheet is down here again in the company financials. What we really want to see, the new thing, is the journal entries. So the journal entries are going to be under the accounting and taxes, and so so we got the trial balance. What happened here? Accounting and taxes. Uh-oh. Freezing on me. Okay, so under accounting and taxes, you're going to go to the journal, enter the journal, and from here we gotta have the date range. We want to do the date range as of our cutoff, 04/30/09, 04/30/09. We entered all of our adjusting entries as of the cutoff. Now notice this has payments and everything. All we really want to see is our journal entries. So if we want to filter that, we go to Custom Report, and we go to Filters, and we want to filter by type. Let's see, transaction type, and we just want to see the journals. So hit OK, and then you'll see all of our journal entries that we hit as of the end of the period there. And then we had some that we reversed as of the first day of the next period, so that our bookkeeper didn't have to worry about them. And those would be these ones as of 5/1. So that's those. So you want to save this report and these two reports to a file, and then of course upload it to us. So I'll do just one of these. You'd go to File, Save as a PDF, and go to your computer. Here's my USB. Charter, you don't have that, you don't have that. You've got student files. We've got accounting 120. You don't have this. We're on week 4, day 7. Okay, and I would name it just what it is, but do not delete the PDF. I would call it the journal as of 05/01/09. Save it, and then if we wanted to find it, we would have to go to the USB charter. Where did we put it? Where did we put it? USB student files 120, and week 3, day 5. No. Is it done saving? It's in week 4, day 7. And there it is. Okay, so obviously then you would go into Moodle here, and you're going to go into this area here. Man, my computer's slow. And you are going to upload that this document that's going to pop up right now. So here it is. You're going to find that, and you will upload it to the Moodle account. Alright, so that's that.